Welcome to our swing trading watch list, daily and weekly charts, bullish and bearish breaks. We'll take a look at the markets and the futures and see where we're sitting still in this wedge, but a really great day on Friday, right off the 200 within just pennies on the SP 500 and the SPY, and they bought the market, and you could just about choose any stock that has good ATR and made some great trades. We were focused in on Apple at the open because regardless what the market did, it was a high probability in play stock, and that's where we focused in on. And then at 11 o'clock, when by the time the market had been running about an hour, I didn't really want to chase anything, so we only took like one other trade on BRTX on a base break after hesitating for a little bit, and then just stayed out of the way. I kept looking for a market pullback, and it just didn't happen. It was like almost 3 o'clock before it even sneezed. So good day for stocks. Charts look good, and we'll take a look at it more in depth. Don't forget to subscribe to our channel while you're here. Follow us on Twitter at Daytrader Setups and on Stock Twitch as well at Daytrader Setups. And you'll see this red subscribe button 9 minutes from the end of the video. From that point on is a tutorial that explains the recap grids and some about our chart, so when we show a chart you'll understand what we're talking about. Other than that, if you understand it all, you don't need to watch the last 9 minutes. Okay, last week we discussed when we were in this area, we're probably going back to the 200 and test it. We did. On Thursday I said we're probably going to test it again. That's exactly what we did on the open. And I actually mentioned that the market may like that retest and buy, and that's pretty much what happened. This was your low on the SP 500 was 26.15.32, and at that time the 200 day was within about 10 cents of that mark. It's now calculated up a little higher. Same thing on the SPY. It actually went within about 3 cents of its 200 day, and they bought that market, and they bought it all day. Never found a lot of hesitation at all in the SPY throughout the entire day. Now, keeping this in mind, we're not out of this wedge yet. We've got to break out of this wedge, get above the 50 day, probably retest this a little bit before we're going to really get going. We could actually still reverse. There's a market technician that I like to listen to a lot. His name is Carter Braxton Worth. You'll see him on Options Action on CNBC, as well as sometimes he comes in and visits on the Fast Money show. And he sees this huge trend line here that if you go way, way back, and this is on a weekly chart actually, it goes way, way back, that there's a lot more stocks have broken down below this level than are holding above the level. Of course, you and I know, and he knows too, that a lot of the market is made up of just a handful that makes the market move, 10 or 15 stocks, and especially the top 50 of this SP 500. But he sees so many stocks that have broke down below this, he's actually leaning toward it breaks down and doesn't go up. So keeping that in mind, you don't want to get in long-term married positions, although many stocks can trade on their own accord. These are my futures charts, different setups and different factors. This was the smaller factor kind of intraday chart I used. Broke out very early on the futures, followed very quickly by the market, and we ran up most of the day. This is my bigger time frame, bigger factor setup, and this is where we had visited a few days ago, and I mentioned that we were probably going to sell off, and we did. This is how my system reacts to my red and green lines that are pre-plotted on the charts. As we broke out, generally we will pull back after a pretty good run. That don't mean we don't run up a little more and then pull back, but we're going to pull back to this line as it progresses up. Now I'm just kind of guessing at where that might happen at. If we started straight down on Monday morning, and that would probably be in the 2640 area. This is broke down. A lot of times you'll get this breakdown just at the end of the day, and we could go right back green and head on up on Monday morning. But if we do reject here and we want to pull back a little more, that's natural. We had a big day on Friday, and this chart is going to, at some point, is going to pull back and meet this green line and then go again. Would be the hopes if the market's going to remain strong. My guess is somewhere in the 2640 area as this rises and this falls will be an intersection. That's an educated guess on knowing what my charting system does. Well, 2640 area would put you just about back to this trend line. So if we run back to the trend line, that's probably about when that ES is going to meet the green line. If it goes sideways here for a day and then pulls back again to the green line, it may be a little bit higher on the next day over. Maybe up in the 51 area by that time. So that's what I'm kind of looking for, is a little bit more consolidation into this wedge and then a break one way or the other. Let's look at the stocks that broke up on our weekly bulls and bears. This was our weekly bear watch last week. Ended up being looks like about 35 stocks on that. Many of them had green days and bounced with the market, of course. And you want to look at that more on a individual stock basis. We're well into the week. Most of these were probably already there earlier in the week, like this stock here had sold down really hard 2 days and now it's starting to bounce. It's got support resistance right here, 42.55. This was your daily bears on Friday. There were bear breaks, even though we had a big green market, and a stock that broke down in the strong market as we had makes a pretty strong statement as to the weakness of that stock. So these could be a real good watch list for Monday if you like to favor the shorts. This is actually probably breaking out of a base too, but these are going into bear zone, losing the 200 day. This was Hawaiian Airlines, got down into the bear zone. It's come down quite a bit, so it may be done with what it's doing. I'm not sure. It's kind of surprised to see this stock still selling. Now this is just momentum to the downside. This is not consolidation break. That don't mean it don't keep going. So a lot of interesting stocks when you find these bears on such a strong day. Here's our weekly bulls for last week. So even as strong as the market was on Friday, we only had this handful of weekly bulls. And this was our daily bull from Friday. Again, remember what we're looking for on this particular setup is consolidation breaks. So look at your charts, see if you had consolidation breaks, and trade accordingly. That's going to be your bigger move stocks that just come out of consolidation, breaking into these areas. And you know, a lot of things have been consolidating. Like this is a nice consolidation. Where LNG is not so much consolidation as it is acceleration. So we're looking for the consolidation breaks, but that don't mean the acceleration breaks can't give you some great trades as well. Stocks with momentum create good watch lists for upcoming days. The consolidation breaks are going to more likely to give you multiple days for swing trading opportunities. We'll get over and take a look at the recaps on the last 5 days, bulls and the bears. This video is being brought to you by STS Pivot System Charting Package for day traders, swing traders, and option traders. Easy to follow charts and scanners, trigger prices right on the charts, on the setups. We teach 2 trades long and 2 trades short. That's all. It's that simple. Just like you see on this chart, the trigger price for this trade was in the corner over here from this point on, with this price posted, not to take it up here, and it did not trigger, but it wasn't posted as a trigger anyway. Came back. This is a classic, beautiful setup. Breaks right here. 167.26 was our trigger price. And we develop these same lines where you can overlay them on your shorter term charts. This is a 2 minute. By not taking that trade early when it went up here to 167.11, you avoided this 30-something minute pause here. It's not quite 30, about 15 minutes. This was a 60-something cent pullback by waiting on our trigger price to get in the trade here. And we were predicting that trigger price. This didn't go green until this happened. You have that up arrow where we're showing the price to go long at, and as soon as it triggers, it immediately gives a go short because it's so close to flipping back over. So that's exactly where it occurred, was right here. And that is how simple that package is to use. Trigger prices right on your charts. Got a 7-day free trial offer, 10-day money back guarantee. Once you get this set up, it's $69 a month. And we're extending as a courtesy, if you take this package, full access to the website, including the trade room if you want to come in and out of there as well. It's not part of the charting package, but it's an offer we're letting you come in if you want to. And I mentioned this in a video about a week ago that we were going to do this. Any previous member to Day Trader Setups from day one ever paid $1 to us, this $69 fee is waived. You can come in and try the 7-day trial, no outlay of cash whatsoever. If you decide you want to go with this package, then you can sign up. We're looking at the bears first. Bear in mind the purpose of bringing this list up. This is what we just looked at on the intro there on the bear breaks from Friday. These go back one more day, 2, 3, and 4 more days for a total of 5 days looking back. And remember, the purpose of this is for you to be able to see the list as it progresses along. Pause the video so you can see the entire watch list and look at the charts accordingly. The ones with the check marks and the yellow and red marks are the strongest, still going in that direction. Most of these were green on Friday. You only had a few red stocks. If they still got the check marks, they're probably still more short biased than long biased, and you can wait and see what happens. Now, like this particular stock, this was not a consolidation break. So when you've got this biggest sell-off and you get into the bear zone, you may be finally actually reaching the area the stock may hold. You've got a pretty big fib retracement on this stock. It's about a 61.8 right here. So that's why you want to find the stocks for consolidation breaks. But a lot of times you can use these as stocks that may have, in a case with a chart that looks like this and it's not consolidation, they may have reached the maximum pullback area. So it can be used a lot of different ways. You want to watch your continuation levels for stocks to continue down. And this stock very well can base one day and go down some more. It's still in the zone, but it has not been a consolidation break. Watch the video toward the end on the 9 minutes, tells you what these setups mean. So there's your look there at those stocks. Pull this down where you can get the last few on the bottom down here. Again, like I said, most of these had green days. So look at 4 days back and 5 days back. Quite a few there. And again, most are still green days and lost that downside momentum. That don't mean they don't go back to it. Get over and look at the dailies. The bulls. This was your list from Thursday, and this is what you ended up with for the follow-up day after they hit the bull zone. A $13 day on this stock. I think that was probably earnings related the day before. You can see the continuation. You can see how the first day showing up can give you a nice trade watch for the next day. Even without the market having the huge day, this particular stock didn't go very much because it had gapped up the day before. Kind of resting. See what this does on Monday. I actually watched this myself a little bit on Friday. FMC, big day, had the gap the day before and into the bull zone and continued on up. I'm almost positive that was earnings. We'll look going back a couple of days prior. If you still got all green marks and yellow and red, everything is in the bullish area. In this particular case, you're running into some resistance here, old highs. That's why we recommend that you have support and resistance on your charts and you understand what they mean when they arrive there. Get a look at 4 and 5 days back on the bottom down here. Still got some stocks continuing to grind up multiple days after we put them on the alert. This actually came in 5 days ago and then sold off for 3 days. This was probably an earnings gap. This stock 5 days in hit the bull zone right here. This is a good example of how a stock can hesitate a day and still be bullish. So that winds this down. Thanks for watching. Be sure to check out our charting package at activetradersetups.com. Be sure to subscribe to our channel while you're here and follow us on Twitter and follow us on StockTwitch, and go over to daytradersetups.com, click on Ninja 8 charting, and you can learn more about our STS pivot system charting package. Thanks for watching. This is a tutorial on our recap sheet. What you will see here is this column here is the weekly list. It's at the beginning on the weekly bear and bull breaks, the daily bull breaks and bears, depending on which one we're looking at, and then you will have 5 days following. First day, second, third, fourth, fifth. So what's here today will be here tomorrow. We'll shift over to here, then to here, then to here. So you got 5 days you can go back and look. The price here, you got the bull zone trigger price, 36.80. This is the price of the profit since this alert. This is the net change on the stock for today. So tomorrow when this shifts over here, this number will be the same where we triggered it at. That number will stay in here for 4 days. The profit will be shown based on the current price of the stock in today compared to this price on the alert. Like for instance on this stock, $3.48 profit from this break based on this close price, up 92 cents today. This number is the profit at the high since we alerted it. It's the most profitable it's been. It got up to $4.27 profit, pulled back, closed at $3.48. As you go on over, like this stock here, SMTC, this was the break. This is the profit so far since the first day, $5.61 4 days later, and at the peak it was $6.31 profit. That's what these columns mean. The next part you'll find is this yellow line. It represents what I'm going to show you over here in just a moment, momentum. It can be on a bull or bearish chart. And then trend stability, if it's green, it represents on the bulls, and the bears will show a red line for trend stability. The last part you'll want to know about, there's these check marks. They represent the bull zone as it progresses higher. Could be the same as yesterday. Down here, this could be the bull zone that's gotten higher and higher and higher as this stock went along, and it means it's still maintaining the bull zone levels. Even the new ones, it's staying above them. This is what the bear grid looks like. Looks the very same. Got the weekly, 1 day, 2 day, 3 day, 4 day, 5 day. So you got a chance to see the stability of the trade. You know if it was up or down today after winning a bear zone the day before. The stability, the momentum, and the bear zone level with the check mark. In the video, we will take this page and we will slide these up and down so you have a chance to pause the video and see every single stock that's in the list. Then we'll move it up where you can see these items, and you can pause the video, and then you can see every single symbol in the list. You can go to your charts and look up what's going on. So that's what's in each one of these grids: the current day, day before, day before, day before, day before. So going back 4 days, you got your weekly there. And all this is right here is something I prepare for myself. I take this day, and this day, combine them into this watch list every day, and that's what I carry forward over to my scanners. And just a quick part about what we mean by these levels changing. This is the bull zone level that the check mark represents the stock staying above, but the bull zone level when this stock broke out was way down here. This was the first breakout, and then as it recalculated our bull zone, that's what the green check mark means, is it's maintaining momentum. The yellow line represents this line that is our minimum momentum indicator used on down or up trades, and then our bull zone levels where it first broke out. And that's all these mean. Trend stability, this is the line we use here, and we come in and we call it trend stability, and that's what this represents here. This line is solid green rather than dotted. It's something we look at on the lows of the day, not being low enough for us not to qualify for trend stability. So that's all these columns mean. So you'll be able to refer to the strength of the stock that is maintaining high enough lows to stay trend stable, what the profit is if you're staying above the bull zone. That's how you'll use this, and that's your tutorial on the grids. This is a mini tutorial on what the lines mean on my charts if you're a first-time viewer or been a while since you viewed. We're scanning on weekly and daily charts for my condition. When this green line is up, it's my bull zone, and when the red line is up, it's my bear zone. You need to be aware of support and resistance lines and what charts do at levels, and that's what these levels are for. Just quickly as I can do this, and we're going to put a video on YouTube getting more from your swing trading charts that'll be more detailed and look at more stocks, how they react to these lines. But the gist of what you see here is this is what I'm scanning for, and as you can see here, this showed up in the bear zone. It did go down for a few days, but these green lines are support, and that's why it fought for a few days, tried to bounce back up, headed back down again, came right back into the bull zone, bear zone, excuse me, and continued on down. Now the lines, here's what they represent. A green line is a place that a stock went up to and rejected. So as this green line redrew itself every time we made highs right here, and then it stayed across here for reference points, continues the same line here for reference points. Resistance, when you get above it, becomes support. This green line was drawn way back in the history, and when this stock broke above this resistance level, when it came back down, it held it, it held it, it held it, it tested it and held it again and again. That was support. That's why I want you to be aware of what these lines mean. You'll see them on my charts. And then the activity that stocks do, sometimes they go, that's my first target, that's my second target. Many times stocks go target 1, pull back a little, target 2, then they may pull all the way back to 1 and go again if they're continuing an uptrend. In this case, it did the pull back. This blue line is a 50 period moving average, this orange line is a 200. So that's what I want you to be aware of as well. And then I have a pivot system that consists of this blue line at the top, yellow line at the bottom, and my target 1 and target 2. You'll see this particular day this stock gapped down, huge gap down, open way down here. The low on this stock was 169.68. I'm getting that right out of this box over here, and the value of that yellow line was 169.67. Within 1 cent it held that line and bounced that day for a huge bounce. It's not a support level, but it's where I look for stocks to try to hold. It's where I look, if I'm short, say from here, This is where I'm looking to get out. I'm looking to move 2 levels, target 1, target 2, going up, target 1, target 2. The pink lines all represent places the stock has gone down to and bounced. This pink line is referencing this last pivot low. So as you're selling down into it, it may bounce again. If you get below it, then it becomes resistance. And that's all these lines mean. I just want you to know what they mean going forward. Thanks for watching the video. Let's get started.